Bitcoin has experienced a dramatic surge in
He wants a Bitcoin, the granddaddy of it all.
Institutions have just gotten involved.
I'm going full crazy Mr. Blockchain now.
I need to get in on this action. Bitcoin is rallying and it's all over the news. Everybody and their grandma is stacking up on it, ready to make it big. But you're here. FOMO creeps in. You're doing your research, you lost a bit of money on this before, or you're still holding on to a losing position, hoping to make a profit. But do you actually understand what this magical invisible gold coin is? And why is it going up lately? Is making money as easy as everybody makes it out to be? Is now the perfect time to buy? Should you buy a different coin instead? Or is it all a bad investment in the first place? Well, my friend, you're in luck, because today I'm gonna answer some of your questions. Look at historic trends to try and make sense of what's happening, give you my opinion on whether it's the right time to buy, and touch upon some alternative crypto offerings. But before we start, just a quick disclaimer. I am not an expert in Bitcoin, and I firmly believe that nobody can predict the price of Bitcoin. Nobody. Okay, so to understand why Bitcoin's value surpassed $1.3 trillion lately, it's important to understand why it was created in the first place. So here's a quick recap. In the aftermath of the banking collapse of 2008, a group of programmers using the alias of Satoshi Nakamoto created Bitcoin as an alternative to traditional finance regimes that failed people time and time again. The digital coin solved a lot of the flaws that came with normal currency up to that point. For instance, there is a finite supply of 21 million coins that could ever exist, meaning no one can print more of it, devalue it, or create inflation artificially. Transactions are stored electronically and made public, so people could literally track the sender, recipient, amount, and timestamp at any point. The process doesn't involve a third party that can add to the cost, prolong the process, or change the rules, such as a bank or a government. Okay, so everything sounds great so far. Why isn't everybody using Bitcoin as money? The answer is trust. For any form of currency to be useful, there needs to be trust. That's what gives it its value. The more people start using it, the more valuable it becomes. But electronic money is just too new to us. New regulations are implemented all the time. There's people that abuse the technology towards their own gain, and it's not widely accepted as a medium of exchange, meaning you can't really use it in most places, for now. And then there's perhaps the biggest downside of all, the volatility. Just a year ago, Bitcoin was worth 3 times less than it is today. A year from now, that could be the case again. Now, if you made it this far, you're probably enjoying the video. So hit that like button to please the algorithm gods so they can promote it. No, really, I'll wait. Done? Great. Let me come over to your side of the screen and just check. 1 second. The volatility of Bitcoin does work for some people, however, the ones that want to make a lot of money from it. So if you're one of them, you'll want to know what's next for the golden child of the cryptocurrency world. There are many reasons for Bitcoin rallying the last few months, such as the approval of the Bitcoin ETF, the anticipation of the Ethereum ETF, growing institutional demand, investor sentiment, but one of the main reasons is undoubtedly the halving. The what? I'm glad you asked. To put it simply, Bitcoin only works with the support of miners, which are people or companies with large computers that verify and process all of the transactions. And when they do so, miners get 2 rewards for their work. They get some really small fees which are deducted from your transactions, and they also get some new Bitcoin every time they verify about 2,000 transactions, which is called a block. And that's essentially Bitcoin mining. Back in 2009, miners were given 50 Bitcoin every time they mined a block of transactions. But every 4 years or so, an event called a halving happens, and the rewards for miners are halved. So in 2012, the reward was slashed to 25 Bitcoin. In 2016, it halved again to 12.5. Then again in 2020, and now in 2024. The last halving will happen around the year 2140. And after that, all the 21 million Bitcoins would have been mined, and the miners will only have the fees as a reward for continuing the work. So will that be enough of an incentive for them to continue mining and keep the network working? Let me know what you think in the comment section below. But interestingly enough, the halving makes the coin harder to obtain, which means there's less supply, pushing the value up. Looking at past halving events, Bitcoin always hit an all-time high in the following months after the event. And while this is not a set rule, it did happen 3 out of 3 times. One might think that's a positive sign. But if you look closely to the graph, you can also see that we reached an all-time high a few months ago. And when that tends to happen, there might be a few ups and downs, but in the near future, a crash is likely in the cards. And it's worth mentioning that the previous 2 all-time highs happened within months of each other. And then it took almost 2.5 years to beat that all-time high. But what are the experts saying when it comes to predictions after the halving? CoinCodex sees a price peak of 170,000 by August of 2025 before it retracts to levels around 100,000. Bitquant believes prices will go beyond $250,000 after the halving. Generally speaking, most analysts are largely positive when talking about growth, and this is backed by Bitcoin's resilience to bad press, regulations, and other obstacles. But if you want my very uninformed opinion about it, I think that if you want to make a lot of money fast, now is not the time to buy. Not Bitcoin anyways. We are near an all-time high and a crash will happen eventually, so unless you can predict the next all-time high, hint, nobody can. You might as well give yourself the best chances and wait for a significant dip, if not a crash. It might also be worth considering that the higher the price of Bitcoin, the more you'll hear about it in the news, and the higher the peer pressure will be on you to get in on it. So what about the other coins, I hear you asking? Bitcoin is just one of 13,217 cryptocurrencies out there. With this much variety, other coins offer a lot in terms of features, with some of them having faster transaction times, software building capabilities, stability linked to real currency, and cute meme icons. While these are some compelling cases for alternatives to Bitcoin, the golden daddy of crypto still holds the throne for a few simple reasons. It's been there the longest. People have started building some level of trust, and after numerous negative events, Bitcoin still stands as a store of value, having survived 15 years without failing. That's good going. So will it ever be dethroned? Maybe. But if you're looking for a relatively safe bet in crypto, Bitcoin is as safe as it gets. If, however, you still want to diversify, a very close second to Bitcoin is Ethereum. Now there are other cryptocurrencies worth mentioning, such as Tether, which is pegged to the US dollar and offers more stability, Binance Coin, which is uncomfortably linked to the Binance crypto exchange, and many more. But if you're looking for the next big thing, you'll need to dig out some coins that haven't exploded in popularity just yet. Research crypto projects that have strong fundamentals and are linked to emerging technologies such as artificial intelligence. But generally speaking, the further you go into the deep end, the riskier things get, and the line between investing and gambling begins to blur. Almost anybody can create a cryptocurrency, and many people were scammed in the past. So you might want to avoid the crypto to the moon hype. But one thing you shouldn't avoid is the next video, just here. No, really, don't avoid this. I'll see you in the next one.